Hi, hey there, Rob Zabbia here, the Zabbia Insurance Agency. We are going to be talking today with my good friend Rob Cecere. He is a real estate attorney here on Long Island, and we're going to just basically be talking about a lot of the things that are going on in the real estate world, and see if we can help you guys out with any of the popular questions that we get from people who are looking to buy or sell homes. So Rob, why don't you introduce yourself? Tell everybody a little bit about yourself.
Sure. Thanks, Rob. So as Rob said, my name is Rob Cecere. I am a real estate attorney, have a couple of offices, one in Regal Park, Queens, and our main office in Hicksville, Long Island. And basically, we handle all facets of real estate, from litigation to transactional, do a lot of buys and sells, and we represent co-op and condo boards. So we're very familiar with the co-op condo world in all aspects, and try to help people with any issues that come up.
Awesome. So the biggest question I always get from people who are looking to either buy or sell a home is, well, number one, why do I need an attorney? So what is your answer to that?
So New York is one of the states that it's pretty much a minefield in terms of documents to be filed and information needed, and especially New York attorneys are really an integral part of the deal. Somebody just asked me a question about New Jersey, because Jersey's a state where some parts of the states they say you need an attorney, some parts of the states you don't. It's split off north and south. But New York has always been an attorney state, and mostly because of all the documents that are needed during the process.
And because of all those documents, what I always hear people say is make sure you get a real estate attorney. So,
absolutely. There are a lot of issues that come up. In fact, on my way here today, I was on the phone with an attorney that may not have been exactly, fluent in all the aspects. And one of those aspects was it was an estate selling a co-op apartment in Queens, and there were issues that came up with documents that were filed in Florida as opposed to New York. A full-service law firm, as my firm is, has an estate department in it. We have the real estate department, and issues come up where we can get answers right away, and if some documents need to be filed, it's done immediately, and answers can be obtained immediately, instead of, as this attorney said to me, I've been trying to get information for weeks. So it is very important to have an attorney that this is what they do, familiar with it, and the more areas that they're involved in, obviously the better.
yeah, I we see it a lot where I could tell when I'm dealing with an attorney that's not specifically in the real estate field. Listen, there are attorneys that do real estate and other things, but real estate is still one of the things they focus on. But, when you get that, the buyer's uncle is a personal injury attorney, they're like, yeah, I can do this, it's easy, and that's when we usually have the problems that pop up, that paperwork gets missed, and then, closings get delayed, rate locks end up expiring, and those are the kind of things that I've seen. So, yeah, you definitely want to deal with, somebody who specifically deals with the real estate, because it's a unique aspect of the law. The other thing, so, you talked about co-ops and condos, and I know with interest rates and market values the way they are, it seems to be a bigger play nowadays. More people are willing to go into buying it. Some people want to buy a condo or a co-op just because the maintenance and all that is taken care of. Like my mom, we were just talking before we went on, my mom is looking, she sold her condo down in Florida, and now she's looking to buy one up here. So you have a lot of people who downsize from a house to a condo, but also a lot of people that are starting out, it seems like. So what kind of unique things do you need to know when you're looking at condos, and what's the difference between a condo and a co-op?
Well, it's a very good question, and most people going into the purchase of a co-op or condo don't really know what the nuances are. Basically, the difference between a co-op and a condo is real property. There's a deed. You're an owner of a fee simple, which is the deed itself. In a co-op, a co-op is you're buying shares in a corporation which owns the building, and then as an owner in this corporation, you're given the right to live in the apartment under a proprietary lease or an occupancy agreement. So there's two totally different ownership rights in a co-op and a condo. Condominiums do not fall under landlord-tenant world. Cooperatives fall under the landlord-tenant world because there's a lease. So from an ownership issue, if there was ever a non-payment, things are dealt with totally differently in co-ops and condos. Both excellent idea, especially in today's market. They've always have been for younger couples just starting out, single folks. It's a stepping stone, and I advise people there are pros and cons to everything in this world, and there are definitely pros to getting in, building equity, whether it's a co-op or a condo, and then using that as a stepping stone to a bigger property, house, or bigger co-op or condo.
The other thing that seems to be popping up more and more, I get a lot of people calling me and asking about insurance on Airbnbs. So is that something that you have dealt with at all?
We deal with it mostly on the negative end, which I mean in the city of New York, Airbnbs aren't really allowed. So a lot of the co-op condos that I represent in the city will come to us because they've heard an apartment is being Airbnb'd and we need to put an end to it. There are very large fines, especially in the city of New York, which come through the fire department. So the city worked on this as enforcing rules in the city is difficult. So in the Airbnb world, the fire department actually got involved, and the fire department will issue fines that run daily until it's rectified, and they can be tremendous, $1,000 a day.
Oh, wow.
So those fines end up going to the co-op condo directly, not directly to the unit owner. And this is how the city was fighting this issue, and it seemed to have worked. There are a lot less of those issues right now. It's basically a short-term rental, which is not looked at fondly in the city.
Right. Yeah, I noticed, because I've been working with a lot of people that are buying, to invest. And, there's a lot of not just New York City, but there's a lot of towns. Like we were up in Lake George. I'm like, oh, wow, this would be a great place to own an Airbnb. But in the city limits, all the houses that are for sale say no short-term rentals allowed. I have a friend, actually, we Amrish Diaz, he's a mortgage guy, and we did a podcast with him. And he owns a condo in Pennsylvania, and that condo association just went to 30-day minimum. Or no, they didn't go to 30. It was a different one, went 30. They went to 7 rentals a year.
Wow.
So you can only rent it now if you do 7 days. That's it. If it's 7 separate, but it can only be, so you can do it 7 months with 7 different people, but they're limiting yours. The associations seem to be cracking down because the associations don't want. I have a client that invested in a couple in Puerto Rico, and her building, most of them are Airbnb'd, so they kind of took over the board. But a lot of the buildings down in Puerto Rico are now going against it. So what is it that, from the association's point of view, besides the fines from New York City, in those areas that don't frown upon Airbnbs, why would an association not want?
It's basically that you look at it as a transient situation where when you have non-owners, even in a rental situation, take a regular sublet, there's just a theory that a tenant is going to treat a property differently than a landowner or co-op owner, condo owner. So if you had somebody coming in and renting for, let's say, a year period, they're going to treat the place a little differently than if you own the place. They're not going to be worried about upkeep. They're not going to be worrying about rules so much. And that gets greater and greater as the period gets shorter and shorter. I'm sure everybody's heard of stories of, these huge parties, and that's what these HOAs are concerned with.
Gotcha.
That you're renting, a summer beach house to a bunch of teenagers, and they don't care about anything other than their party that's coming up. That's really the problem. Is that every situation? Absolutely not. Have I used Airbnbs? Yes. Wonderful, given the situation. But like you said, different towns, different cities handle them in different ways. Las Vegas, I know, I've used Airbnbs in Vegas. There's a limited number that the city allows, and then you have to follow a very strict list of requirements. I think Florida, a little looser. Florida, there's giant corporations that are coming in, buying up houses just to Airbnb.
Wow.
Yeah. So that, I think, will change as time goes on.
Yeah.
Because unfortunately, people remember the bad things that happen in these situations, not all the positives. So.
Right. Yeah, I know. Insurance-wise, there's a lot of insurance companies will not do short-term rentals.
Yeah.
A lot of them want a copy of the lease from the tenant before they'll insure the property, or if they don't get it, they'll cancel the policy, with a 30-day notice. So, yeah, definitely. I know on the insurance side, it's the same thing. The insurance costs more when you're renting out a property versus being owner occupied.
Yeah.
And a lot of companies just won't do the short-term rentals. And the same thing with student housing. Like if they know that you buy a place by a university and you're going to rent it out to college students, a lot of insurance companies, that's one of the questions, a knockout question.
Yeah.
Is it going to be students in there? And then they won't do it. So, yeah, that's really good to know for those people that are looking to get invested into Airbnbs, to really look into the town. I mean, just because because that's the thing that we've told people when they're looking to buy, go to an area that you like. One of my friends loves Mystic, Connecticut, went there a lot during COVID. So they bought a house up there and they're doing really well. But they know the area, and that's why they went up there. So, like I said, Lake George, we went up there on vacation. I'm like, wow, this would be a good place because, you could use it when you want and then rent it out when you don't, which is the whole idea of an Airbnb. But if you're in the village, you can't do it. So you really need to, before you pull the trigger and buy something, you really need to do the research.
Yeah. My partner, Jim, has a house out in Greenport, and he's been Airbnb.
Oh, Greenport's huge
Yes.
for Airbnb. I mean, those houses went from hundreds of thousands to $1 million now. Because everybody's doing that out there.
Without a doubt. That's exactly, he bought about 10 or 12 years ago and bought at the right time.
Yeah.
Not even looking at this possibility, but now it's just exploding out there.
Yeah.
So, but very loose rules, and he does as much homework as he can. It's like a part-time job for him, just renting out this one to make sure that he doesn't end up
with a party.
Yeah. Absolutely.
So what else? What are you seeing like in the market? I mean, like I'm hearing, there's still very little inventory. People don't want to get out of their houses because they're paying low interest rates. Yep. I'm seeing more people are doing renovations because they're looking around and they're realizing that they don't even want to downgrade because if they downsize, they're really not saving anything because the new house is going to, unless they cash out. I tell people all the time, I lose more of my clients to other states than I do to other insurance companies. Most of my clients that I'm losing, it's because they're moving out of New York. I'm referring people that are, buying in Florida, the Carolinas to friends of mine, even Arizona. I've been referring some of my clients out that are, moving out to those areas. But that seems to be really the only really inventory that's popping up are the people that are really just looking to get out. There are still some downgrades. I have a neighbor who, he just sold his house, in Dix Hills and moved to a condo associate, like a 55 and over condo. So that, those are really the only situations I'm really hearing of. What are you hearing out there from, your realtor partners and just in the market in general?
Yeah, it's becoming a tough market. Basically, you're 100% right that there's very little inventory out there. So what we're seeing is, I believe, that the sellers don't want to sell for whatever reason. They don't want to correct on the price because buyers are saying, well, the market's changing. When we see interest rates go this high, the first thing that changes is the sale prices come down. That has not happened. Sale prices have stayed the same. We haven't had any issues with appraisals. Houses are still appraising for the high prices. But because of this, you have still somewhat of a frenzy on the buyer's end. But buyers are going into these deals now with a little different mentality. Like, I haven't seen contracts really negotiated prior to 6 months ago for 10 years. Now, buyers are coming back with, oh, here's my inspection report. Here's a list of things I want fixed. And sellers are starting to address these issues because a year ago, 2 years ago, it was, I have repairs. Sellers' immediate responses, I have 5 other buyers that don't care about repairs.
Right.
So we're seeing a little more of that. So that shows that things could be changing a little, or it might just be a little blip that we're in. It really depends on, getting more inventory. But 100% right. To downgrade into something smaller that's going to cost you more than the house you're in doesn't make financial sense, and you see a lot of people, deciding to stay.
Yeah, and it's funny because one of the things I'm hearing from the realtors that are still, because I still have realtors that are killing it. It's not like
Yeah.
they're all, but and a lot of them are just going back to the old school stuff. Some of them are door knocking. They're just reaching out to different communities of the people that are the situations. Working with divorce attorneys or real estate planning attorneys. People that would be the first ones kind of notified when
Right.
inventory might come up on the market. So that's one of the strategies I hear that a lot of them are really doing.
Yeah.
The other thing I'm also seeing, I teach a course. I just started doing a course for the CE for the realtors on renovation loans and the unique aspects of the insurance for that. And the reason I came up with that is because we're getting more and more of that because the inventory is low. People are willing to go in and buy a house and then make it what they want, knowing that they can't get it. So they can basically borrow on what the house is going to be instead of what it is now.
Yep.
And there's one of them that's being built down the block from me. It's crazy what this guy's doing to this house, but he tore down the house. And, we're seeing a lot of that now where people are just going into neighborhoods, they find the neighborhood they want, they tear down the house and start over. What kind of unique things, for anybody who's thinking about buying a house that needs to be renovated on your end of it, what kind of things do you look for that they should watch out for?
Well, a lot of these houses that need work, some of the issues come up. We've had one recently where there were a lot of violations against the house, which could be, you could look at it as a positive. So some sellers don't want to go in knowing that they have to put all of this money in to sell their house to get it to be able to sold at a higher price, free and clear. So I've actually had a couple of situations where my buyers took houses with violations, knowing that there was going to be a lot of work done to the house. So that's something that could open up some doors for some buyers that fall into that category. Now, not every buyer wants to go in and renovate, but it allows buyers and younger buyers fall into this where they can get into an area that they wouldn't otherwise generally get in, because you can find a house for 100, 200,000 less. Finding a house that may not need all of the work immediately, it's livable, is a great situation for especially a younger couple. The flippers out there, which there still are, and there always will be, because there are always deals to be had. And what I was going to say is towards, your point about the realtors. I've made this point recently, is that the longer you've been in your business, the bigger of a group you have following you. And it's tremendously important in the real estate world right now, because it's, if you're a new broker just starting out in the last couple of years, it's very difficult, position to be in. You do have the brokers that have been doing this forever, and you don't even have to do anything to get referrals. And so the brokers that I deal with on a daily basis are still busy. And, we'll always be busy, because like you said, it doesn't matter how bad the market is, whichever way, people are going to always want to look to move. And North and South Carolina are tremendously popular right now. I think more so than Florida.
Yeah. Well, Florida is just getting so expensive now.
Yeah. Right.
The insurance is crazy down there. The
real estate taxes.
Yeah, real estate taxes are climbing because the value of the home and just the price of the homes.
Right.
It used to be a bargain down there, and
Yeah.
it's not anymore. So yeah, that's definitely what we're seeing. The Carolinas, you could pick up a house for less than half what you have up here, and
Yeah.
so I know a lot of people will cash out up here and then buy something that's even bigger than what they had up here down there. But you just got to get used to, like Florida's kind of New Yorkized.
Yes.
So you can go into parts of Florida where you just feel like you have the good restaurants, you have all that. A lot of the places people are going into the Carolinas aren't there yet,
Right.
so they have to adapt to, going without pizza and bagels until they make trips back to New York.
Yep. But once it gets there, then the prices come up again.
Yep.
Austin, Texas, another place.
Yeah.
5 years ago, you could pick places up there half the price. Now, they're skyrocketing there.
Yeah,
Well,
it's hot in Austin right now. Not just temperature wise.
Yes.
People are buying there like crazy.
Crazy. Yep, absolutely.
Yeah, and it's got a whole scene, so I think that's why a lot of people are drawn down there.
Yeah, yeah, yep, very popular.
So the other thing that I've been hearing a lot about is with the, just with the selling. Like a lot of people, are just because the market has changed. They haven't. A lot of them haven't really adapted, and there's kind of just, they're not used to like. You can't just say, "Oh, I'm not going to accept an appraisal" or that kind of stuff. Have you find, so you just said before that you're seeing that people are kind of going back and fixing things that they're finding and stuff like that. Are the banks are getting tighter with the interest rates? And I mean, you had a couple of banks just got downgraded today.
Yep.
So you finding the banks are getting stricter with demanding some of these things and not, like waiving appraisals and waiving stuff like that?
We haven't had any banks waiving appraisals. They're going to want to see an appraisal, especially given when the interest rates go higher, there's obviously more of a chance of a foreclosure. And that's when the banks, tighten their belts and really, enforce some of the restrictions. So we're seeing that now. We haven't seen it to where it's a detriment, where they're pulling loans on houses. Banks are still making loans. Time-wise, we're pretty much at the longer end right now. It's rare that you'll see loans approved within 30 days and closed in 6 weeks. That's fast right now. So we're looking at the 60 to 90 days is usually the norm.
Which is
Norm.
traditional, yeah.
Yep. But when things are a frenzy, sometimes you'll see these houses done in 30 days, which is right now it's not happening. But banks want to be careful. They want to be careful because they want to protect their investment. This is an investment for them, so they want to make sure that and the banks do make sure that the violations are taken care of. There's nothing outstanding. I do some work with a very small bank in Middle Village, Queens, and we're very careful with their loans as to anything outstanding, judgments, liens, even sidewalk liens that you see in Queens a lot, because the bank wants to make sure that they're clean and clear. So
I'm glad you brought that up because I actually had a client that was looking to do a mortgage and was buying it's like a 7 or 9 unit building in Queens, and we couldn't get insurance on it because the insurance company said there were too many violations on it. So is that something that the banks also look at?
it depends on the violations. So in Queens or in any, the 5 boroughs, multiple dwellings, it's just the norm, believe it or not, to have violations. And those violations are generally Department of Housing Preservation and Development, HPD violations. Those are the violations for like vermin, double locked door. You see them every day. And they're graded A, B, and C, from serious to not so serious. So serious have to be corrected in 24 hours, not so serious 90 days. And pretty much, I don't want to blanket it, but most multiple dwellings in the city have violations on them. So depending on the bank and depending on what they understand, those types of violations we can work with. Sometimes they'll give a buyer a period of time to correct them. Sometimes they're not even overly concerned. If they're serious, if they're the A violation, then you want to take care of them right away. But where the banks are concerned with are the DEP violations, the building department violations, boiler violations. Those violations are more serious when it comes to lending and closing. So those we want to pay very close attention to.
So a big part of your practice, I know, is landlord-tenant. And because of everything that happened with COVID, basically the landlords kind of took it pretty hard because the tenants didn't have to pay rent and they just still had to pay their bills. So, for those, there's always people out there saying, you should buy property, rent it to others. What kind of advice do you have to people that are looking to get into the landlord game?
It's a very tough game right now. And, you know, there's still money to be made in rentals, but you have to know going in what the pitfalls are. And the landlord-tenant world right now, if you run into a bad tenant in the city of New York, you're looking at a minimum year and a half to get somebody out. Right now in Queens, I just had warrants signed that were submitted in a case in the last week of March. So you're talking almost 4 months for warrants to be signed. So that's just a very small part in a landlord-tenant case, which you get to at the end of the case. Usually they were 2 to 4, 6 weeks at most to have those signed. So people going into these situations in a 1 or a 2 family house have to understand they need a cushion to pay their bills, their mortgage, their taxes, for a period of 12 to 18 months, given the worst scenario, because you certainly don't want to run into a situation with the bank. There's no way for us to know how these cases are going to go and how slow and behind each borough is, because it's been bad for the last 3 years since the pandemic. Plus all the programs that were available for tenants, as good as they sounded, sometimes take a long time. So the emergency rent programs for the tenants that pays most of their rent, which is pretty much at the end now. I have a case on tomorrow morning where I'm dealing with this. Once a tenant signed for those ERAP programs, cases were put on hold indefinitely until there was an answer. So it was very difficult explaining to my smaller clients that you just have to wait. There's no court intervention at this point whatsoever. So the biggest, advice for new landlords coming into the game is you have to prepare for the worst. Hope for the best, but prepare for the worst. And a lot of times I give my clients advice that it may be worth paying a tenant to move out earlier, even if it costs a few $1,000s, just to avoid that expense going forward.
Is it the same? Is that just New York City, or is that the same in the rest of the state?
The ERAP program is in the state, so we'll see it. I have a Nassau County case tomorrow, but it's mostly the city that's difficult.
Gotcha. Yeah, I have a client that owns several properties. She'll only buy upstate because the counties up there are quicker to get people out when they're not paying rent. She knows the sheriff's department in those areas, so this way they get in there right away if you have any problems. Yeah. Where it seems like down here in Nassau and Suffolk and Queens, and Brooklyn, where I deal with a lot of clients that have the properties that they rent out, it's like you said, I've heard of a year or more.
Oh, easily, and other states don't have this. Jersey, it's much more streamlined. It's really New York and then the boroughs.
Gotcha. So, so what else is out there in the real estate world that you want to kind of share with people as far as what you've been seeing?
We've focused on a lot of the important things that are going on right now, where we're seeing more litigations in real estate for different reasons. Of course, the landlord-tenant world, lots of cases. Now that the courts opened up and the ERAP is finished, landlords want to get paid. So we're seeing a lot of that.
I always like to, when we do these podcasts, to let everybody kind of know how we got to know each other, and I think yours is a very funny and unique story. So, Rob, why don't you kind of cue in everybody how we got to know each other?
So, me and Rob go back now probably 12 years.
Well, the boys were 5, so wow. Okay. It's 14 now.
Yeah, wow. Time flies. But our boys who are now going to be, mine's going to be legal this year. We're playing PAL football together in Half Hollow Hills, and we both ended up on the same team, and Rob was coaching, and I always like being involved with everything I do, so I started helping out as assistant to the assistant coach, and we had a great run, topped off by a PAL championship at U12s, and unbelievable experience. The friends, the people we met over the years, incredible. And here we still are, friends, and working together, and couldn't be better.
I know, it's so much fun. Like, I always hear nightmare stories of from guys who coached football. And we never really, I mean, we had a couple of parents that were,
Yeah.
but I mean, but they didn't stick around long. Like, I mean, we have a lot of our parents that we still keep in touch with. Some of them we
Yeah.
still get together with every once in a while. And yeah, it was a great run, a lot of fun. I think the kids learned a lot about life.
Yep.
You know, the way we, you know, because we were about winning, but everybody played. You know, we didn't have we weren't, you know, the best team in the division every year, but we always tried hard, and the kids all had fun, and they even were friends off the field, which was a lot of fun. They went to each other's birthday parties and
Absolutely.
did all that stuff, and then we started doing it in a networking group together, and that's when we actually started doing business. We knew each other for all those years, and we never really talked about business, and then we got into the networking thing, and then it turned out that another guy who I was networking with is also one of your friends, so
Right.
we started talking about that, and then also we're both car guys. I
Yep.
know you got a couple of really cool cars at home.
Yep. We're just about to hopefully finish a '69 Camaro, which is coming
Nice.
to the end. So, yep.
Yeah, I'm
Keeps me busy.
still working on the wiring on the '68 Mustang. It's like taking forever, but I never have time. And now we got the
Yes.
puppy, so it's like, you know, I got to babysit sometimes. And then we're doing a backyard barbecue, you know, kitchen thing, and so I'm keeping my smoker because you can't get those anymore.
yeah, nice.
So I stripped it out. So this weekend I ended up stripping that down to repaint that because I can't have a brand new barbecue kitchen with an old rusty smoker in there. So, but yeah, I mean, things get involved, but it's cool that I always like our audience to kind of know, like, you know, we're not just, you know,
Yeah.
business professionals. We actually have had a lot of fun together, a
Absolutely.
lot of different events, a lot of really good lunches with our mutual friends. And you know, and it's good to know, like, you helped me with the lease on my my new location, which was much appreciated. You know, so it's always good to have people in your corner, especially people that you know and you have common.
Absolutely. The more things you have in common with people, the smoother things go. And as we've learned through our mutual networking group, it's not always about business. You learn a lot about people from their personal lives and what makes people tick, and realize how small of a world it is.
Yeah.
Every time you speak to somebody, and it's all positive.
Awesome. Well, this has been a great time. Hope our audience got a lot of good stuff from Rob about what's going on in the real estate world and landlord tenant and Airbnb. So stay tuned. We're going to have more of these coming, in the future. I appreciate all your time.
Thank you, Rob.